Symphony's quarterly numbers. The company has also provided for its entire investment in INFS. And let's discuss the quarter gone by with Nrupesh Shah, the Executive Director of Symphony. Mr. Shah, thanks very much for taking out the time. While we know the bottom line and the top line numbers, anything that stood out this quarter that you would like to highlight for us?
First and foremost, in the beginning of the season as well as in the beginning of the year, there was a huge inventory pile-up, especially at a trade level, not only of Symphony Hercules, but entire competition. But considering good summer and also on account of variety of strategic initiatives taken by the company, that inventory has been completely liquidated, and in June 19, we have registered highest ever June quarter sales. So, after 2018-19 degrowth, starting June quarter, we are back on track. That's number one. Number two, in terms of the gross profit margin, it remains at about 50%, while during the quarter, we laid a greater emphasis on advertisement and sales promotion. Hence, EBITDA margin is slightly lower, but this is the quarter during which we have to incur the most. So, year as a whole, we expect it to stabilize in the range of 4 to 6%.
Okay. And, while you said you've taken a hit in margins this quarter because of your additional spends that you've taken, that obviously should be helping you to translate, to push sales further for the rest of the year. So then for the rest of the year, the balance part of the year, would you see incremental gains on the margins, a cover-up of what you've lost this time?
So, starting off-season, we are witnessing very buoyant sentiment and demand as reflected in collection post 1st July. As far as gross margin is concerned, we are reasonably confident to maintain around the same level, but at EBITDA level, it should increase substantially because advertisement and sales promotion expenses will be substantially rationalized during the rest of the quarters of the year.
Would you expect a run rate of about 38 to 40 odd crores in terms of your EBITDA as a reasonable target for yourself in the upcoming quarters too? Or this was a quarter which did well on the back of the summers being so intense?
I think in the respect of EBITDA margin, it should be back to what it was earlier. That is 2016-17 or 17-18, something here and there. So it should be back to close to 28 to 30%.
EBITDA margin 28 to 30% by the end of the year.
That's right.
Mr. Shah, a word on your exports. I think the EBIT from there had fallen to about 14 crore versus 20, which we'd seen in the corresponding quarter of last year. And of course, in the March quarter, I can see a loss also there. How did the performance pan out there?
No, you are absolutely right. As far as exports are concerned, whether during June quarter or even during 2018-19, we haven't done well. But we have initiated series of measures, and it's likely to yield the result in the coming quarters, including we have established our 100% subsidiary company in Brazil, where we are witnessing good summer. And at the same time, in some of the overseas markets, again, last summer was not good, and hence they were sitting on some inventory and reflected in our export performance.
Mr. Nrupesh, I'm just going to go back to your earlier answer about the margins picking up. What is going to aid it to pick up from 13% to about 28% that you mentioned? Because that's a big jump in margins.
No, so mainly in the June quarter, advertisement and sales promotion has been close to 28 crore on a top line of 160 crore, which is about 17%. Year as a whole, as I mentioned earlier, advertisement sales promotion year as a whole should be in the range of 4 to 6%.
And just a sense on how did the volume growth pan out? How much the top line growth that we've seen is a function of volume and the pricing growth? Give us a sense, how are the prices also panning out for you?
As far as volumes are concerned, we are not disclosing that figure, but by and large, volume growth has been in line with the top line growth.
In line with the top line growth you're suggesting, which means then the prices
Yes.
were flat during the quarter.
By and large, yes.
Okay. I just have one final question, Nrupesh. You guys have always prided yourself on being a company with fairly high return ratios. The console numbers obviously bring down the return ratios by a bit. That's the very nature of the beat. How do you expect to end FY20 with on the ROC and the ROE front?
So in terms of the absolute amount of capital employed in the core business, that is air cooler and appliances, on standalone basis, despite growth, it should be by and large in the vicinity of the same amount what it was last year. And same should be the case on consolidated performance. So current year, we are expecting to post much better top line and bottom line performance, which should improve return ratio further on core capital employed.
Okay, so the console ROC would be at the end of FY20 would be?
I won't give any specific numbers because ultimately it is based on the actual performance what we deliver. But as it's going and year has begun, we are quite optimistic and registered very healthy ROCE.
Okay, fair call. And just one last question. I believe I read some notes which said that the inventory is now very low in the system or almost cleared out. Do you reckon that pricing could improve or will prices stay stable?
So we have come out with and we will come out with series of new models of air coolers in residential range, commercial range, package air cooler as well as industrial cooler. And they are feature rich, performance rich and also having premium pricing. And that should take the overall profitability margin, whereby we are confident to maintain gross profit margin of at about 50%.
Okay, Nrupesh, we'll leave it at that. Thanks so much for taking the time out and being with us today.
Pleasure.